Hi, Todd Gourno here with Three Creeks Capital Management. I'd like to talk to you today about our 2023 outlook. I know this year has been an extremely difficult year for all investors. No matter if you're conservative or more growth oriented, it's been all around a tough year. So what's our outlook for 2023? We think ultimately we're embarking upon a new era of Fed, investing, economics, so on and so forth. So here's what we think ultimately. The old era of low interest rate, free money or stimulus by the Federal Reserve and low inflation, we believe that era is over. We think what you can expect moving forward is higher inflation, although we do think it comes down from the 9 or 10% level that we saw earlier in 2022. We do think it normalizes somewhere around 4 to 5% for 2023. We think this higher inflation is here with us for quite some time, and we believe that's the case for a number of reasons. First, ultimately we have an aging population, so we have lower workforce participation. Because of that, you're going to continue to see higher wage growth. And because of that aging population, you're also going to see higher government spending on entitlement programs. So think of things like Social Security, Medicare, and Medicaid. So in addition to that, we also believe that what happened because of COVID, where countries sort of became less willing to work with one another when it came to supply chains, you're going to see higher inflation due to deglobalization of those supply chains. So in general, less globalization, more nationalism. That's going to help keep inflation higher. So ultimately, higher interest rates, probably lower overall prices in housing. We think that earnings from companies in the S&P 500 here in the U.S. Will come down some next year due to these factors, and ultimately we believe your investing strategy for 2023 and maybe over the next few years, your strategy needs to be super flexible. You need to be nimble and look for good, high quality companies. And we also believe that while equities or stocks may continue to be overvalued for some time, bonds, while they got hurt a little bit this year, they look to be a pretty decent option at this point. So in general, that's our 2023 outlook. We think we're embarking upon this new era, and we think you should adjust your portfolio accordingly. Thank you, and if you have questions, feel free to give us a call.